Hey, what's up, guys? My name is Frank Mularcik, and this is episode 3 of my portfolio analysis series. So today we're going to be taking a brief look at Carnival Cruise Line stock, ticker symbol CCL, and this is my third position in my dividend stock portfolio. And before we get started, make sure to like the video and subscribe. It really helps the channel out a lot, and I really appreciate all the support you guys are giving me. So as always, the first thing we're going to take a look at is the investor relations page. And one of the interesting things about Carnival is they're actually dual listed on the New York Stock Exchange and the London Stock Exchange. So Carnival Corporation is listed on the New York Stock Exchange, and Carnival PLC is on the London Stock Exchange. And apparently, they're the only company in the world included in the S&P 500 and the FTSE 250. So that's sort of interesting to see. So we're going to look at their business update, which is basically what they released along with their Q3 earnings. This was from October 8th. So basically, they said that they're starting to resume some of their operations. So right here, in the face of the global impact of COVID-19, the company paused its cruise operations in mid-March. And last month, which would have been in September, the company resumed some limited guest operations, and there were some successful voyages on 2 of its ships in the Costa Cruise Lines. And the company is continuing the limited resumption of its guest cruise operations with sailings on additional Costa ships shortly, as well as some AIDA cruises, which are going to be starting up soon. So basically, they're sort of getting a few cruise ships going out and getting a little bit of business going in a little bit. So it's still the very beginning for that. But they said they're working with global and national health authorities to have comprehensive set of health and hygiene protocols, help facilitate a safe and healthy return to cruise vacations. So they're really definitely focusing on the health and safety, obviously. And then also, they talk about their future fleet. So they're expecting future capacity to be moderated by the phased reentry of its ships and the removal of capacity from its fleet and delays in new ship deliveries. So since the pause in guest operations, the company has accelerated removal of ships in fiscal 2020, which were previously expected to be sold over the ensuing years. So the company now expects to dispose of 18 ships, 10 of which have already left the fleet, and the 18 ships are approximately 12% of the fleet that was before the pandemic, but they were only 3% of operating income in 2019. So these ships are basically less efficient, and so I think that's why they're getting rid of them, to try to improve efficiency. And then on bookings, the company believes bookings in the first half of 2021 reflect expectations of the phased resumption of its guest cruise operations. And then also, as of September 20th, cumulative advance bookings for the second half of 2021 currently available for sale are at the higher end of the historical range. The company believes this demonstrates the long-term potential demand for cruising. Pricing on these bookings are lower by mid-single digits versus the second half of 2019 on a comparable basis, reflecting the effect of future cruise credits from previously canceled cruises. So basically, they're getting a lot of bookings, and they said for the second half of 2021, they have a lot of bookings, which are on the higher end of what they're normally at. But the income they're going to get from those bookings are probably going to be less because some people whose cruises got canceled got some like credit points, I think. So that's going to cut into their profits a little bit, I guess. But I think it was the right thing to do. And then they also talked about increasing liquidity. So they noted at the end of the third quarter, we have over $8 billion of available cash. We have recently begun to optimize our capital structure with the early extinguishment of debt on favorable economic terms. And the extension of debt maturities. So that's good to see. So let's look at how they got that cash. So due to the pause in guest operations, the company has taken significant actions to preserve cash and secure additional financing. Since March, the company has raised $12.5 billion through a series of financing transactions, including the following. They borrowed an aggregate principal of $2.8 billion in 2 tranches under a first priority senior secured term loan on June 30th. They issued $1.3 aggregate principal amount of second priority senior secured notes on July 20th. They entered into debt holiday amendments, deferring certain principal repayments otherwise due through March 2021. They completed a registered direct offering of 99 million shares of common stock and used the proceeds to repurchase 886 million of its 5.75% convertible senior notes due 2023. So basically, they got some or sold some stock, and then they used that to pay down some debt, it looks like. And then also they said the company's monthly average cash burn rate for the third quarter was $770 million a month. And they expect for the fourth quarter for it to be $530 million a month. So that's really not good, but they do, like they noted, they do have some cash on hand. So that's good to see, but they need to get some revenue in there to really start being able to do something, you know? So this is their income statement for the third quarter, and it's pretty abysmal. They had $31 million of income, which is pretty terrible. And like they said, they had their net losses were about 2.9 billion, which isn't great to see, but I mean, it's expected, you know. And then the balance sheet, like they were saying, they have around 8 billion in cash. So their total current assets are around 9 billion, and their current liabilities are around 10 billion. So they definitely have more liabilities than assets in the short term. But also, if you look, last year they had 2 billion in current assets, and they still had around 9 billion in current liabilities. So their current ratio is definitely better, but they're definitely going to be having quarterly continued losses. So that's going to be eating into that cash position and assets. So I also wanted to touch on the stock offerings a little bit. The two that I'm looking at are in September, and they're saying that they, as of September 15th, they're planning, or they were planning, to get about $1 billion. Here it is, $1 billion from that stock offering. And then in November, just November 10th, they did another one. They're planning about $1.5 billion from that one. And I think they did some earlier on in the summer as well, maybe. I'm not exactly sure, but these were just the two I wanted to look at. And so they are diluting the shares, I guess, for the shareholders, but they really need that cash right now to be able to cover their losses every quarter. So that's pretty much all I wanted to touch on related to the financials. I just wanted to go through some of the more current things that's going on with them because obviously they've really been hit hard by this pandemic. So that's really what everyone's concerned about, I think, with the stock. But if you look, it's currently around $16 as of November 11th, and it was up near 40 and up even into $50 a little bit at the beginning of the year. So it's really taking a beating. That's about, let's see, it's about 70% almost that they're down on the year, or since their peak at least. So that's obviously not good to see, but you could say they're at a really good discount right now. But long term, it's just not exactly sure if they're going to be able to pull through, and if the cruise line industry is going to be a viable industry in the future, if there's going to continue to be a lot of demand. So there's really just some things that are up in the air that people really aren't sure about. So that's why there's a lot of hesitation with the stock. So I'm definitely in this one for the long term. I bought originally around $27 a share, so I'm still down a bunch on my position. In my Fidelity account, I bought around 15 or so it looks like I'm up right now. But overall on my position, since I initially bought in my Robinhood account, I'm still way down. But for me, I think that the cruise industry is going to do great over the next 5, 10, 15, 20 years. So I think they're going to recover well going into the end of 2021 and into 2022. I really think that demand for cruises isn't going to go away in the next few years. I think it's people are still going to want to go on cruises. That's a thing a lot of people love to do. So I'm just holding for right now. And that's my plan. And the quote of the video is, "Endurance is one of the most difficult disciplines, but it is to the one who endures that the final victory comes." And that one was said by Buddha. And I think it sort of goes along with my strategy with Carnival, which is just to wait it out. And the long term, you know, I'm just going to endure these short-term pains that Carnival's having and that it's having on my portfolio. But in the long term, I think I will be victorious with this stock. So that's going to wrap it up for this video. I hope you guys did in fact enjoy it, and I'll see you in the next one.